Hey traders, quick review. Friday's option expiration. A reminder that when we have volatile markets, no one knows where it's going. Not me, not the next guy. I continue to say nobody knows, but we can make educated guesses. And that's what this business really is all about. When you got it going in the right direction, make sure you get paid. And when you're going the wrong direction, make sure you use stops. Never let any one trade take you out of this game. Early morning chart was posted on Friday. Woke up, took a look at where markets had plunged to overnight. We had used the 08 as our resistance. Anytime that we have a high, we usually stick a couple points right behind it and say that's our resistance in case of a minor break, minor head fake. In this case, it was clear it was a retest failure, never did break it. Was not so clear is what's going to happen overnight. Obviously, once we held this line, which we had already identified as a key resistance zone for us, and then on a retracement, once we undermine one low, we look for the next significant low, and then the next, and the next, and the next. Simple as that. A lot of times I will play music as symbolism for the ideas that we're thinking about, and you've got me going in circles, friends of distinction. I honestly thought that this red box would be the key. If we get above it and stay above it, then obviously we're going to new highs. If we take it out, then we need to come back and we need to test inside this box. If we break that, then the next logical box is down here. So first things first, you've got to get by this box. Next, you've got to get by half of the box and then all the way down here. And in our trading room, we had talked about washing out that 87. If we got through that, then we had to go back and test that big 85, 82 zone. That's a crossroads as far as I'm concerned. Once that washes out, then you need to be able to test that 82. If that breaks, then anything goes in the opposite direction. We had thought that the shorts were ahead of themselves on that previous day. Again, this would be Thursday's notes. And this was obviously a no-brainer. Anybody that had looked at the range overnight knew the 92 was the middle, so you've got to use 92 to 95 as your primary resistance. If it holds, you're in luck coming south side. And then first targets are obviously coming down to test that 85, 82 if you can get through 87, and then continue to look in the 70s. And once we get down to the 72 and a half targets in here, now it becomes strictly a trailer, as this should start to become an area of natural pivot, we call that. So we were using 92 to 95 rest of the day, obviously, and then as luck would have it, you're in an umbrella trade. Traders like E-mini player have been around the block quite a while. You're not going to fool traders like that. No one knows whether these ideas will hold or not, but certainly they are areas of interest that a lot of different methodologies will discover and define. You noted my post to Man Over Market, great super trader. The monthly middle is at 69.5, and that's one of the things we look at, obviously, is different size rotations and in different time frames. I love Armstrong. I think if you are serious about your economic well-being, you're going to read a guy like this, and whatever you believe about him to be true or not, there's a lot of controversy around his work, but I believe he's one worth following. Thank you to all these great traders who include me in their posts, and thank me for the attempts I've made to share some of the things I've learned in 25 years in this business. And certainly Zeke, along with me, who's been at it for 35 years. We have a little different style than many, but there are lots of different ways to win this game. Anthony, Futures Radio, pay attention, sharp guy. I've met him personally. I love him. He's very laid back and knowledgeable and as sophisticated as they get. This was an interesting rotation, the 72s to 78s. I felt if the shorts were going to win early, they needed to contain that 78, stop the bounce from occurring, getting back into the 80s. I thought that realistically conservative shorts would want the 82 region, 83, to hit it, and we felt that it might just spook them to continue going south without them. That's one of the problems in a trend. You have to short these lower highs, and obviously just the opposite the other day. You had to keep buying the higher lows as they pull back. A couple of days ago we said that 95 was an aggressive buy, so this was the opposite idea of that. Once we got down into the mid 60s, we had a number of targets that we had completion targets anywhere from 66.5 to 62.5, and we felt the bulk of the trade should be done. We also thought that this was the time where to reverse psychology, that if traders were really looking for the last couple points, they were going to be just as guilty of those who wanted to wait for 82s to 83s to short. We said, let's beat the crowd and make sure you're out by be ahead of that 62.5. Turned out that 64.5 was a perfect end of day support. A rehashing of some of the rules I had posted the previous day, posting the ideas I thought that were very important. Make sure you got paid. You took risk today, make sure you got paid. We had posted 82.25 retest is a guess, and everybody wants that for re-entry, so let's hit it ahead of that and accept our stop. If you play it and you're wrong, make sure you accept your stop outs. 5-minute umbrella chart. There is no better pattern in the business than this umbrella chart. Once you bump into this blue line and get back under, and you just keep on rocking and rolling and then go sideways for some consolidation. We'd also said we'd look for some divergence in the afternoon as we started to make perhaps lower lows with lower volume on these spikes lower. So we had the trend play, the 78s. Once we started to hit that 66.5 low, we started to identify the days, the certain days that we thought that we were tagging their lows and trying to knock stops out. And once we got in sub 69.5, we said make sure you're paid coming through the 68s to 67s, and a lot of our traders started to think that way too. Happy to make sure they get paid. This was a calculated number that we had, and make sure you are paid was what we were thinking. And then opposite of everybody waiting for 82 short, now everybody's waiting for 62 to buy. We want it out. 62.5 is a 40% retracement on the yearly levels. We thought that was a biggie. And last year's high, 88.75, it's still resistant. So that's something we'll pay attention to this week. Obviously, the function of this 75 to 76 area, partly because it's a 10-point trade, it's a bot trade. We said make sure you're paid if you happen to play that direction. To a lot of traders, you don't even have to worry. You had a great day. You don't need to do anything. And we decided to use this as our end of day stop, using 78 if you were scalping short one last time. For longs, taking profits from their punch from 64.5. 10-minute chart backed up to fives, clear underneath all of the moving averages, the umbrella trade in all its glory, and then the late day bounce after 2 o'clock. This is a timing trade for traders that have had a great day, great week. Turned out that substantial part of the week's range was option expiration day on Friday, and by the end of the day, anybody that's had a good day wants profits. That causes bounces. And this is why we had said don't worry about the last couple of points. Maybe you're going to bleed back 5 or 6 or 8 or 10 or whatever to get 2 more. So risk reward definitely changed here. Love the 30-minute chart. And we've got different size boxes. We measure from all different swings. It's part of our system. Has nothing to do with moving averages. Has more to do with levels. And in this particular box, we had noted this was a case of support until broken, and obviously a couple points underneath it still would not be terrible. It's if we break that and continue down this road and then come down, then obviously this big 2031.25 idea is still supportive. This has been a Fibbo number but it's also part of our market structure. It's preordained, and those who understand the secret code that we use understand clearly why this has been very important. It has nothing to do with a Fibbo level. It has to do more with identifying market structure levels. And Fib Doctor posted ideas about the 55 area. A reminder, that is the year's open. Last year's high, 88.75. So certainly that's a range we want to pay attention to as we go forward. Right out of the gate, shot down south side, had our bounce, held, came down into this range. Chop, 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 and then afternoon session, the drive to test support, and then the bounce into the close. And this was our known resistance level, and then obviously that 92 to 95 zone that we thought was all important once we broke through here. This was the key. I'll leave a blue arrow on to show something, and then I'll come back in with the red arrow to show that, okay, this was support, and now this is our resistance. And obviously any retest will come back to these blue arrows. All right, that's it. Hope you guys had a wonderful day. Hope you have a great weekend, and this will be posted by the end of the weekend.